For years, you've been told a story, a neat, tidy version of the world economy presented in textbooks and classrooms. But what if I told you that the most crucial economic truths, the ones that actually dictate your financial destiny, were intentionally left out? Imagine a game where you only know half the rules. That's precisely what's happened with your economic education. Today, we're ripping back the curtain. We're exposing 3 fundamental economic facts your schools never dared to teach you. Secrets that, once understood, will fundamentally change how you view money, markets, and your own path to wealth. First, let's talk about the invisible thief, the silent assassin of your savings, inflation. Schools teach you that inflation is just rising prices, a simple economic phenomenon, but they rarely delve into its true nature. Inflation, particularly in a fiat currency system like ours, is often a direct consequence of an expanding money supply. When more money is printed or created digitally, the value of each existing unit of currency decreases. It's not just prices going up, it's your money's purchasing power going down. This isn't just an abstract concept. It's a hidden tax on your savings, your wages, and your future. Every dollar you save today is worth less tomorrow. Schools emphasize saving, but without understanding inflation, saving alone is a losing game. You're effectively running in place while the finish line moves further away. Now let's shatter another myth. The idea that all debt is inherently bad. This brings us to our second hidden truth. Debt as a weapon and a tool. Schools often paint debt with a broad, negative brush, associating it with financial ruin. While reckless debt is indeed dangerous, productive debt, or leverage, is the engine of nearly all economic growth and wealth creation. Good debt funds assets that appreciate or generate income. A business loan, a mortgage on an investment property, student loans for a high-income career. Bad debt funds depreciating liabilities. Credit card debt for consumer goods, car loans for a vehicle that loses value the moment you drive it off the lot. Understanding this distinction is not just academic. It's the difference between financial freedom and endless struggle. Schools should teach you how to wield debt as a powerful tool, not just fear it. Finally, let's expose the true puppet masters of the global economy. The third secret, central banks and the real market movers. Schools teach you about supply, demand, and efficient markets. They imply that individual buyers and sellers dictate prices. But the reality is far more complex. The actions of central banks like the Federal Reserve, the ECB, or the Bank of Japan often dwarf the impact of individual market forces. Their decisions on interest rates, quantitative easing, or tightening directly influence the cost of money, the availability of credit, and ultimately, the valuation of nearly every asset on the planet. They can inflate asset bubbles, stimulate growth, or trigger recessions with a single policy announcement. These aren't just minor adjustments, they are seismic shifts. To truly understand the market, you must understand the powerful entities pulling the biggest levers, not just the small cogs. These 3 facts, the invisible tax of inflation, the strategic power of debt, and the omnipotence of central banks, are not just theories. They are fundamental truths that govern your financial world. And understanding them is your first step towards true financial literacy and freedom. Don't let outdated education hold you back. Arm yourself with knowledge. Like this video, subscribe for more insights, and share it to wake up others.